Okay. What's going on? Beautiful. We got folks in here now. Yeah. So we're gonna give everyone we're gonna start this in a few minutes now, in just 2 minutes from now, okay? So yeah, you guys get yourself comfortable. All right. So let me know what country you're joining us from. You want to drop some? Let me know what country you're joining us from. Let me see in the chat box. I'm reading through the chat box right now. Let me know what country you're joining us from. Let's go. Let me know. Beauty says Belgium. Oh, I see you. How are you doing? From Belgium, Namibia, Uganda, from the US, Nigeria, Ghana in the building. Let's go. We've got Egypt. Oh, beautiful country. The hedge trader from Egypt. I like that. We've got Nigeria. We've got Missouri in the US, beautiful state. We've got Tanzania, beautiful country. We've got Ugochi from United Kingdom. It's beautiful. It's good to have you here. Let me know where you're joining us from. Let's introduce ourselves to one another. If you're joining us here for the first time, this is Yemi. And yeah, from SwingTradeFX, as you always hear, hi, it's Yemi again from SwingTradeFX. So let me know where you're joining us from. Let's do like a quick introduction. I can't wait to get into what I've got for you guys today. I can't wait. Zoe, yes, my student from US. Hey, watch out for that trader, man. This guy's killing it. It's killing it. The result speaks for himself. Like, my students are killing it. They are killing it. Emirate FX from Nigeria. It's good to have you. It's good to have you. It's good to have you. And let's see. Yeah, swing trade FX to the world. I mean, yeah, that's great. That's great. And yeah, let's see. Okay. So let me get into it. First of all, I want to say shout out to everyone. Shout out to everyone in the community. Shout out to everyone for real. Um, First, all my students, right? You guys are killing it, right? It's a different feeling when you share all this knowledge out, and it's a different feeling for students to be disciplined to follow, through with everything that was shared. Like, shout out to you guys. Having been to, whatever stage you're going through right now, been through everything, and I know the kind of focus, discipline, determination, requires for you to actually be uh, a profitable trader, right? A lot of people try to make it seem like it's very easy. Yes, it can be easy when you understand the arbitrage of it, but I know that it requires a lot of resilience, a lot of discipline, a lot of consistency, and I just want to say shout out to you. And yeah, for the YouTube community, I'm not sure the Instagram community knows what's going on. So someone can just, if you got an Instagram right now, just post this link on your Instagram. You should share the love to your friends that are struggling with trading as well. So you should share with them as well. Show You can update and tag me, tag SwingTradeFX on YouTube. I'm definitely gonna have you on my post as well, on my story. So that being said, my my plan here is to come on YouTube at least once in a month, right? And the purpose, when I was thinking about doing this, I told you guys, I gave you guys a promise that in the beginning of the year that I'm going to be active on YouTube. I'm definitely going to be making sure that I host 1 or 2 live session, for everyone. Oh, I see Dylan. I see Dylan. That's my brother right there. And I said I'm gonna come on YouTube to try my best to see how I can help, folks kind of navigate through forex trading. But it's not just it's not just about forex trading. I see a bigger vision right here in such a way whereby I can use forex trading to empower guys and everyone to actually have the right mindset about life. So this is beyond just coming here to want to make, money, and I'm gonna speak to your psychology today. As you know me, I'm so big on psychology, perhaps might be your best psychology mentor. But then I am not trading, I'm not trying to have a community of traders that are just all about focus on I want to make money. Listen, when if that is all that you want from forex trading, you're never gonna get to that point. Or perhaps you can make money, but you can't make the big money. I could tell you this 100%. So for that being said, I said every single time I come on this live session, I'm always going to make sure that every of my community members level up in one way or the other. So this is beyond forex trading. And I said, any book I'm currently reading, I'm going to recommend it, because the last time I recommended a book to you guys, a lot of people actually, I got like hundreds of DMs, and it's like, I'm going to get this book, I'm going to get this book. And, a lot of people have been keeping me update on how the book is transforming their lives. So I gave you guys this book last week. It's called Mastery by Robert Greene. And for sure, I'm not giving you guys any link to go buy it. So I have nothing to do with this, guys. But I just want you to be able to grow as a person and just see life beyond just the realm of making money. Remember, for you to make a lot of money, you have to be transformed mentally. And transforming mentally is not about the time you spend on the chart, right? It goes way beyond that. And there's a culture of traders right now where most people, which I'm going to talk about, right? There's a new culture amongst traders right now that most people just want to make money and just go do flashy stuff. I want to buy the best car. I think you should be more mature than that. So this is the book I'm currently on right now. It's called Reality Transurfing, right? This book, I'm not sure it's so popular like that, because you get to see this book amongst folks that have made, like, let's say $10 million and above, right? So there are kind of books you want to make when you want to read when you're still trying to get into the finance, game, and you want to make money. You want to talk about Rich Dad Poor Dad, how to think and grow rich. Those are like the beginner level book if you want to level up your mindset and you want to be, you just want to break that limitation of scarcity, right? But this book is more like when you want to understand how the world works through the lens of your thinking. And because trading has a lot to do with thinking and having to polish your mental state, this book, you won't really find it. A lot of people will not really read this book, but it's more like the people on the upper echelon. So I recommend it. It's called Reality Transurfing. And this is the second time I'm reading this book. It's the best book I've ever read in my life. I could tell you this for facts. I've read a lot of books. It's the best book I've ever read. So for anyone, I'm just gonna type it right here. Um, I don't know who wrote it. I don't care about, whatever. I'm not making profit off of this, but I just want to help someone. Reality Transurfing by I'm gonna pin in on the chat box right now. Vadim Zeman. If all, like I said, if all you ever so this is it right there. This is it right there. So uh reality, oh, okay. So if all that you ever want wanted to do about like trading is just like to make money, I think you're not really maximizing what this can give to you. Trading can give you freedom. Trading can literally change your life. It can change the way you think. It can give you the freedom to develop yourself. And which brings me to the next step before we get into the charts. Okay. I'm not just going to be your forex coach. I'm going to be your mindset coach generally, life coach, whatever you want to call it, for people who care too. Because I just want to use this platform, which is the skill that I have, and I know that you guys really respect it a lot. I want to use that to actually bring you into some part of my world and how you can learn a thing or two from it and how you can literally break, just that force of average. And it's really very important. The second thing I'm going to talk about, is there's this growing culture amongst traders all over the world, right? I've got friends who trade from different part of the world. I've got friends in Dubai, US, I've got in Nigeria, I've got in different part, UK, and 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 one thing that I realize is because Forex gives you that access to liquid cash, it gives you access to liquidity. Literally, we're like out here downloading money. That is the whole idea of Forex trading. Once you have the skill, every day you get up, you download money, right? You lose some, you win some if you treat it as a business. Now, most people get into trading with this quick get rich quick mentality. Like, I'm just gonna get here, just gonna learn the skill, I'm just gonna make money out, and that is all to you. If that is all you ever see when you're trading forex, I could tell you from a place of experience that you're never gonna go far. Why? Because forex trading goes beyond just money. It shapes your discipline. It shapes how you think about money. It shapes what you do with money. It shapes how you manage money, right? And this is the point I'm getting to. I want to give especially aspiring traders that wants to get into the market, and just consider this as me giving you an advice. I know some of you guys, you know, have different experiences in life and all of that, and I just want to share this with you through the lens of my experience. You see, when you make money in forex trading, come into forex trading with a mindset. And the mindset is for you to use forex trading to fund your dream. If all that it is to forex trading is, I just want to make money and spend, having that consumer mentality, you are never going to go far, because that is going to reflect even in how you trade. You must have a plan. What am I going to do with the money I want to make in forex trading? You should be able to have a time where forex trading goes from your active source of income to passive source of income. What do I mean? You go from a realm of trading forex, right? You go from a realm of trading forex from a place of desperation, right, to trading forex as a hobby. Do you understand that? You go from a realm of trading forex from a place of desperation to survive to using forex as a leverage to making your dreams work. And at that point, you turn forex trading to a hobby. Okay? Now, this is what I mean. Forex trading should be able to fund your business. Forex trading should be able to provide liquidity for you to diversify into investments. Don't have this consumer mentality that you're making money in forex trading, you're buying cars, because those are the examples you see. Here in SwingTradeFX, you're not going to see that, because we are all mature traders right here. And I'm trying to actually create that blueprint of how you can use forex trading to actually build weight as a vehicle to build more wealth and diversify your portfolio. So why would I find it very easy to wait for trades as much as possible? Because I'm not in a desperation to make money. Have made money off forex, I've diversified my portfolio, and I do not feel the need to actually be desperate to make money off the market. So I'm just giving you guys a good game. A lot of you guys are going to be profitable. And I always love to advise my student in this way. Before I even start teaching you, because I know you're going to be profitable, I want you to be able to set your priorities straight. You want to get to a point that trading is just a hobby. And the moment you get to that point, you're going to realize that everything you call bad trade psychology just disappears, right? Because you're not trading from a place of desperation. Desperation triggers your emotions, and your emotion causes you to do things that antagonizes your goal within the context of trading. Okay? So I hope some of you take this advice genuinely, and I hope you run with it. And I hope you run with it. Now, I'm going to start from the psychological part of trading. Then before we get to, doing a lot of chart work, as you know, I'm always big on psychology. So it starts with having a plan of what you want to achieve with Forex trading. But I'm going to tell you this, that if you do not have a plan with what you want to do in Forex trading, you're not going to have the clarity. And if you do not have the clarity, your psychology is going to suffer a lot, a lot. If you're struggling with psychology, you can watch some of my video I made on psychology, right? Where I kind of broke down psychology into practical steps. So I'm going to start with this. What is trading psychology? Let's think about it. What is trading psychology? What do we call trading? A lot of people use the word psychology, psychology, psychology. And a lot of us come into Forex trading, thinking that, okay, I think I'm disciplined in real life, but I should be able to be successful in trading. Trading is going to mirror and reflect what you have within your mind state, the emotional attachment you have to money that cause you to act erratically. Trading is going to expose that to you. But I'm not here to tell you the theoretical part. I'm just going to give you 3 things that can prove to be a cure to your bad trading psychology. Because I've been asking questions before this live session, and a lot of people actually have a psychological problem when it comes to trading. Psychology is how you think about your action in the market. That means that when your action or when you're thinking about what you want to do in the market is distorted, you're going to find out that that distorted thinking influences your execution on the chart. So we've got to get it right here, because whatever you think here is going to be mirrored back to you on this chart. The way you think about money, the way you attack about money is going to be mirrored instantly about money. So I love to use this example. You see, life is so kind to us all, because many times we make mistakes and life gives us the grace to correct our mistake before it get caught up with us. So for example, let's say you have a car and your wipers are bad during the summertime. You won't realize that you're doing something wrong. You won't realize that you ought to have changed that wipers until it starts to rain. And this is how we all live our lives, right? Until there's an urgent need to change something that causes a threat directly to our existence, we don't like to take that action. So what makes trading different? Trading is so different because trading doesn't give you that grace and opportunity. We are so used to the grace and opportunity we have in real life that we can make a lot of mistakes for several years and decades, and we would not have the first-hand results of our action. In fact, many of us are going to correct it and we're just going to move on with life. But in trading, once you make that mistake, trading is going to give you an account, because it happens so immediate and you're going to see your account. So for example, if you enter your trade where you're not supposed to enter it based on your strategy, almost immediately you can actually tell that you are wrong. And you're not just going to be wrong, just be wrong. is going to cost you your money. It's going to induce you emotional pain until you correct that. Now, a lot of us, when we're wrong, we don't always like to admit we were wrong because we've never operated within a field or within a conclave where we are held so accountable. So many of us, when we make these mistakes, we try to want to correct these mistakes and say, you know what? Oh, I think the market is going to move back. I think this is this is that, da, da, da. And just one small loss spirals down into bigger, bigger, bigger losses. So it starts with impatience. It starts with you not actually entering your trade at the right time. It starts with you just breaking a rule. Then it spirals back to you hoping that the market will give you that grace. And then the market keep moving way against your hope. And now you have your account on the line. And now your account is actually going down in red and you're losing a lot of money. Now you're at a point where you've lost a lot of money and you cannot afford to close because now you just want the market. Now you don't even want profit anymore. You just want the market to retrace back and just minimize or mitigate that loss. Then that leads into more loss and more loss. Then your account is blown. It feels like a veil was taken off your eyes. Then you're thinking, what have I done? I should have been out of the trade. Let me know in the chat box how many of you guys can relate to this. Let me know. How many of us can relate to this? I'm going to give us a solution. You have to get the mind right before you get the money. Once your mindset is aligned the right way, it's easy for you to make profit out of the screen. And you get to a point whereby you are not attached to the profit, you are not attached to the losses. Every single trade has been put on a game mode. It's more like you're like a robot. You just trade your plan and you allow your plan to deliver to you. So now, what are the solutions? What are the solutions? I'm going to offer you three solutions. I'm going to offer you three solutions before we get on the chart. The first solution. So okay. Let me first take it from the people that get it into the market. When you're as a newbie trader here, if you're here, I'm going to say the first thing you need to do is stay off the chart and first learn how to think like a trader. And how does a trader think? First of all, a trader's thoughts are so clear. A trader thoughts are so clear. As a trader, we operate like a sniper, right? You have a plan, you have a clear coordinate, you're working with the right timing, and you can't afford to miss it. So if you're a new trader, don't go for the shiny, don't go for the lure, right? Don't just go into wanting to make money. I promise you, there's something we call beginner's luck in trading. Beginner's luck is what all of us go through when we first got into trading. We take the first trade and this trade is going well and nice, and we take the second trade. Then we get to a point whereby we start to assume a certain patterns, and the same thing we do before that bring us this money that we do not earn because we do not have a system built around it. Then we start to lose that money. We've all been there. It's called a beginner's luck. So, and the reason why this beginner's luck is so destructive is because it lures you with the possibilities of what you can make in the market without giving you the capacity it takes to maintain that consistently. So instead of you understanding what the market is trying to tell you, that you need to build a system, you need to be able to think this way, you find yourself jumping into other pairs and then other strategies and then finding the holy grail strategies, and then before you know, 1 year, 2 years, not only have you wasted time, it has cost you a lot of emotional pain and it has cost you a lot of money. So that is for the real trader, for the new traders. Now, for traders here who are struggling with psychology, I'm just going to give you three things. The first thing is have a projection. What is a projection? A projection is a realistic and mathematically broken down information and data of how much you can actually make in a year based on your skill level, based on your resources and what you have. Now, I'm going to expand on that. This is very, 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 very interesting. And I want everyone to watch this part again and think about it and use it to create your own system. As a trader, when you have a clear projection of where you're going, the psychological effect is it decreases your level of anxiety. So say, for example, if all I'm targeting to make this year is $100,000 in trading, and I know my strategy, the win rate, the efficiency of my strategy, and I know realistically my resources upon projecting it can actually offer me that $100,000 without me having to over leverage my account. It becomes so easy for you. It's about showing up every day and turning that big goal into a daily achievable goal or perhaps weekly achievable goal. So I'm going to invert it a bit. So for you to have a clear projection, what must you have? First thing, you must have a system. You must have a system. And it's not just about having a system. You must have a system that you have worked on over time. You have tried and you have taken that system and you have operated it over and over and over and over. Now, what's the reason for that? Now you are able to have datas. So I'm going to give you in a layman term. So let's say my trading system offers me 6 trades in a month or 10 trades in a month. Now that is a data, right? Number one. Then for me to enter any trade, I got to do 1:2. That means for me to be qualified to take on any trade, minimum reward for every risk I trade is going to be 1:2. Now, what does that mean? That means that at least for every win I get, I'm getting two rewards, 2 times my risk on a minimum scale. So that means for every win, it gives me the grace to take 2 losses. Now, when I have 1:3, for every win on 1:3, it gives me opportunity to make 3 losses. So the idea of that is this. For every win that you make, it puts you 2 or 3 steps back. At a minimum level, it should put you 2 steps forward. Sorry. So now you have a system where you have an average numbers of trade in a month. That's number one. You can see the average number of trades you take in a month over the past year. So let's say for 4 or 5 months you've been trading and you realize that, okay, it seemed to me that month 1, I took 10 trades, month 2, 9 trades, third month, 10 trades, 11 trades, 12 trades. So what you do is you add all these numbers of trades together and divide it by the numbers of the months. You're going to have to determine, it's going to give you the numbers of your average trade in a month. So that average numbers becomes your standard. If your standard is 8 trades in a month, then that means you shouldn't be looking beyond taking 8 trades. Because if your system can actually work on 8 trades and you're trying to overstretch your system to taking 15, 20 trades, that means that you are doing something, you're using your system in a way that actually works and antagonizes what you want to achieve, basically. So once you have the data, the next thing you want to know is your average risk reward per trade, like I said earlier. For any system, at least, I'm giving you this, for any system, from a professional point of view, should be able to give you 1:2 for you to qualify to get into the market. It doesn't make sense when you're risking $100 and your projected reward is $100. It doesn't make sense. For every $100 you risk, you must get 2 times of it on a minimal scale. So that means if you've got 8 average trades or 10 average trades in a month, risking 1% of your account, you have chances on a very excellent month of 20% in a month. For every loss is -1. So let's say you, out of the 10 trades, you won 5, you lost 5. The 5 you lost are going to be 5% off. The 5 left that you won are going to be in a multiple of 2, 10%. 10 minus 5, you're still up in the month for 5%. Now, that means your average win rate or your average percentage, profit percentage in a month is around 5%, hypothetically speaking, using the case study of 1:2 and 10 trades. Now, the question is, how does this affect my psychology? Before I answer that, I'm going to give you the third thing. The third thing now is to actually know the resources you're going to start with. So say, for example, all you can afford to start trading with is $1,000. So now you have your resource. You have your data on the average numbers of trade you're going to pick in a month. Then you know your average risk reward, which translates into your average winning rate expressed as percentage. So that means in a month, if your risk per trade is what? 1%, let's say realistically we're working with 2%. Now, 2%, I want you guys to look at the screen real quick. I'm just going to be making, I'm just going to be showing you practically how this works. So now, let's say your average trade in a month is there are 10 trades, right? Then your average risk reward is 1:2. Okay? And now your average win rate on these 10 trades are, let's say, 50% win rate. I want to show you how to turn trading into a business. 50%. I know I mentioned something like this the last live stream, but every stream I'm just trying to touch on different layer. It's different layer. It's so multi-layered, right? And I'm just going to try teaching you guys. So your win rate is 50%. Okay? So that means average win goes this way. 5 win, 5 losses. So if your risk per trade, I'm giving you data that you have to be able to come to terms with. If your risk per trade consistently, remember this has to be kept consistent. Consistent. It has to be K, consistent. Pardon my K right there. So now, for every win, what is the data looking like? For every win, you have 5 times 2, 10%. For every loss, you have, 2%, sorry. For every win, it's going to be, since 1:2 on every win, right? So that means for every win, that means 2 times. So it's going to be 5 times 4, sorry, is 20%. Let me just erase this so that it can be clean. That means for every trade you win, you get 2 times of it, right? So if your risk per trade is 2%, that means for every win, you're talking about 5 times 4, 4%. That means we have 20%. For every loss, right, is 2%. 5 times 2% equals to 10%. So your expected profit expressed as percentage on a monthly basis should be 10% realistically. Now, this is a system that have just 50% win rate. Now, there are going to be months or there are going to be actual trades where you have 1:3, 1:4, 1:5. I'm not factoring that in. I'm just working with the minimal. At minimal, you should be working with 10%. So now that means that every month, if you have $1,000, every month, this $1,000 should increase by $100. Now you roll over 1,100 into the next month. That means the dollar value of the risk you used to take 2% has increased because now you have compounded it by 10%. And because the market is a very exponential market, Forex trading is an exponential field in such a way that everything compounds and in no time you can make a lot of money. So all you got to do is do this calculation, factoring the compounding effect of it and project it into the end of the year. So when you have it all projected into the end of the year, you have a realistic result of what you should expect by the end of the year. Now, the question is, how does this affect our psychology? How does this affect our psychology? You see, there's a direct correlation between fear and uncertainty. You are afraid because you do not have a knowledge of a thing, which is uncertainty. You're not certain of the outcome. And as humans, we love to be in control. Whatever we have a knowledge of, we feel empowered because we feel like we're in control of it. Whatever we do not have a knowledge of, we feel powerless and it results into uncertainty and then we have fear. And the two biggest emotions that affect traders in the Forex market is fear and greed. So if you can take away the fear, naturally the greed eliminates. If you can take away the greed, naturally the fear eliminates because both of them work intertwined. They're so intertwined with one another. So when you have a projected expectation of the outcome of your trade based off your strategy, based off your resources, based off your strategy efficiency, it becomes so crystal clear. So now you know that by the end of the year, I'm not having an unrealistic expectation. I started with $1,000. I'm looking on a minimal scale. I'm looking at a situation where I'm going to be making 30 grand by the end of the year. Because this is what my strategy can give to me. Anything outside of this, I'm overstretching that strategy. I'm going to find myself over leveraging, and over leveraging is going to lead me to being afraid. And when I lose big, I'm afraid to enter the next trade, and the spiral goes on and on and on and on and on. This is usually the major issue with traders because they don't have an understanding of how to compartmentalize their mindset in such a way that it allows them to actually trade in such a way that their thinking or their expectation of the market does not have a direct effect on their activities on the chart. So it's all about thinking in terms of business. A lot of you think you're traders, but your action shows that you are gamblers. And most people think trading is gamble. It's a business like every other business, and you have to treat it as such. So once you have a clear knowledge of what to expect by the end of the year, you're going to find out that naturally the urge to be impatient, the urge to over leverage, the urge to be greedy, it goes down. It doesn't mean that that is going to cure the greed and the indiscipline, but awareness allows you to effectively conquer or overcome a weakness. So the moment you have this projection set and you have these numbers, you're going to realize that if in a month all I do is 10 trades, you don't find yourself taking 4 trades in a week. The moment you find yourself taking 4 trades in a week, you realize that you're overstretching your strategy. What that does is it recalibrates your mind to asking yourself, what are you doing wrong? Am I getting into every position? Why am I doing that? Oh, I think I'm beginning to bring the pressure of life into my trading and I'm going to ruin everything. One of the things I do with my student is I do not actually rate them based on the profit they bring to me. I rate them based on the process. So if you're making $10,000 when you're supposed to make $2,000 based off your book that I'm aware of, I ask you questions. How do you make this money? And usually I always uncover it. You over leverage. While it's good to see, this is not sustainable on the long term, because you are just 2-3 trades away from blowing your account. Because when you make that big money, you're making a profit without the capacity. You do not earn your way into making that profit without overstretching your system. So you find out that the market is giving you this profit from a place of indiscipline. And that is the most dangerous thing you can ever do, being rewarded for indiscipline. Now, that indiscipline creates false confidence. That false confidence creates recklessness. That recklessness makes you become so greedy because now you tried it the first time, it worked, you want to try it again. And usually, every big win always precedes a big loss or a blown account. How many of you guys can relate to this in the chat box? So you have to get this right. So at the end of the day, when it's all said and done, everything being referred to as trading psychology is your ability to have clarity of thoughts, to align yourself in a way that your mindset does not function in antagonist to your operation on the chart. So once you come on the chart every day and you know that by the end of the year, I'm targeting just 30%, I'm targeting $30,000, sorry, not because I just called out a random number, but by the reasons of my trading data, right? 30,000 is what I can operate on based on the resources I have. You find out that every week you show up according to plan. You don't have the urge to rush your trade. You don't have the urge to take 4 trades. You don't have the urge to want to over leverage because you have an expectation and you know that whatever I'm going to do in the market this year, minimally, I got to do 30,000. Then you can be able to position yourself and say, you know what, my first big year is never going to be this year. This year, I'm just going to use it to build foundation. I'm going to use it to build leverage. I'm going to use it to create leverage. Then perhaps, maybe the next year is going to be my first big year because now I've built leverage. All I have to do is rinse and repeat based on the data I have. Last year, I had $1,000, and based on my data, my trading strategy, and my efficiency, I could grow it to $30,000. Now, this year, I have bigger resources doing what I'm doing over and over. Now, you know the beautiful thing? When you earn your way into that kind and level of consistent profitability, by the end of the year, you've not only made money, you've built something that will make more money for you. Confidence. Confidence in having a clear plan, executing it, and following it. Confidence in earning every profit that you made. Because now, you never made any of those profits increasing your risk. You earned those profits by compounding your account in such a way that your percentage risk grew in value over time. The same 2% that used to be $20 has grown to be the same 2% that is now $1,500. So you didn't increase that risk. You earned the right for the dollar value of your risk to increase, not your risk. When you get to that level, you are not just trading from a place of the technical knowledge. You've gotten to a level where you now have more confidence. Now that push you into the intuitive. You have the right mindset intuitively with the market in such a way that you can look at the market without analyzing. You can tell where the market is going, because why? Nothing is distorting what you see on the market. You're not coming to the market to make money. You are coming to the market to do what you do with an expected outcome, profit, loss. You already have your data. And this is how it works in the market. Anything outside of this, I can promise you, you're just going to find yourself in circles. So in forex market, we make money by not trying to make money. We make money by working with data. We make money by keeping discipline, by keeping our discipline, following the data that gave us that. So now your focus, if this is your first year of trading, or perhaps you have little resources, this is February, your focus this year is not the wishful thinking that by the end of this year, I want to buy a Lamborghini. By the end of this year, I want to buy this and that. No, your thinking this year is to align your data to see the right projection, work towards it, and say to yourself, my first year, I want to use it to build leverage. Because if I can build leverage this first year, the same 2% that used to give me that used to give when I risk is the value is $100, 1:2 used to give me $200. Now, when I grow my leverage to, let's say, 20 grand, the same 2% now gives me 400. The same 2% one day is going to be the equivalent, the value equivalent is going to be $2,000. At 1:2, the same 2% is going to be 4,000. We make money in the market by following our data and letting the money grow in such a way that we do nothing, we change nothing. Because of the compounding effect of the market, our same risk per trade increase in dollar value. And over time, because we've rinsed and repeated, we become much more better. We become much more confident as a trader, because now you know you can't blow that account because your risk is consistent. And secondly, you are not increasing that risk. And you earn everything by compounding step by step. So don't try to take shortcuts, because it's not going to work. Think about it yourself. How many years have you been struggling with trading? And the moment you are able to hack that mentally, I tell you this, there's no numbers of theoretical books you want to read that is going to solve this problem. You do not approach a practical problem using theories. You do not solve a practical problem with theoretical solutions. Your psychology is a practical problem. And when you have all this advice and all of these ideas like, oh, do not be afraid when you're in a trade, be disciplined and all of that. These advice, as much as they look good in their face value, they do not serve you any purpose. The common example I use is this. If you're falling off, or let's say you go skydiving, and by the time you jump off the plane, you try to put up your parachute and it's not coming on, then the other person is telling you just be calm, maintain your calmness. That advice, as much as it sounds so nice, is not practical at that point in time. Why? Because you've already been hijacked by fear. Why are you hijacked by fear? Because your expectation to actually put out the parachute in such a way that you can float in the air has been dashed. So you are literally in a state of tension, uncertainty. There's no amount of advice that will be given to you at that point in time. There's no advice that will work. Never. And this is how it happens in trading. So if you think you're going to buy another book on psychology, if you think you're going to read 100 books in psychology, ask yourself, how many books have you read? How many YouTube videos have you read that have spoken more, have you watched, that have spoken more on the theoretical part of psychology and have not actually devised a practical solution to this? So when if you're still within that loop and circle, of having psychological problem with respect to your trading, I think it's time for you to start working with your datas. Data gives knowledge. Knowledge provides awareness. Awareness eliminates ignorance. Ignorance eliminates uncertainty. Uncertainty eliminates fear. When fear is off the table and there's clarity, there's no room for greed and, just recklessness. So I hope this helps someone. Let me know if you have a pure understanding of that. So I'm just going to stop at that and let's look at the market due to our time. Let me know. So I'm just going to, give us an idea of, what the market is doing right now and what to expect this new week and, what we've done so far. Remember, I told you guys that I sent a poll out this week that what do we think about um, GBP, JPY? What do we expect about what the market is going to do? And a lot of people said bearish. At the beginning of the week, I was very bearish on it, but over time, we generated the information on Monday, and we literally just know what happens in the market. And let me give you guys a cheat code, right? If you're trading GJ or any pair against the JPY or any forex pair, you don't get to make decision on Monday. Wait for Monday, let the market decide and let the market set or build up its direction, right? And for Tuesdays and Wednesday, Thursdays and Friday, that's where the trend gets to establish. I'm giving you 8 to 9 years of trading experience. 8 to 9 years of trading experience. Okay? You don't, every pair you're trading, don't always attack, don't always get up on Monday and you want to make money and all of that. Don't always get up on Monday and wanting to get into the market. Whatever signal you see on Monday is always the wrong one, right? Allow the market to open up on Monday, where this is where the bulls and bears get to decide who owns the market. And from the candlestick being printed, you can already see even better signal where the market is going to. And that's why almost all the trades you pick on Mondays, they're always a wrong trade, except you're working on the lower time frame. I'm talking of 1 minute, 2 minutes, or you're like a scalper, right? But if you want to follow a trend on a pair, always wait for Tuesdays, right? Let the market open on Monday, let the market open those information, use the information, leverage it based on your strategy and get into the market. So let's work on this one real quick. Now, from what we can see on GBP JPY, right? Let's just look at it through the lens of the weekly time frame. What can we see on the pair GBP JPY? One thing that is so certain that we can see right here is that the market is still on an uptrend. The market is still on an uptrend, okay? So we have a range. The first thing you want to do when you're looking at the market is to understand the trend of the market, right? A lot of you guys do not have context to whatever the market is doing, right? You just jump into the market based on what you're seeing. No, you want to see the context of the market from a wider scope, and then you want to take it to actually the smaller context of the market, what the market is doing right now. So say, for example, if you do not see the bigger picture, you might be at a level whereby the market just want to reverse against you, right? So it's always good to get the best experience in life. You want to see things from different perspectives. So what do I mean? Let me give you an example. Look at this right here on the screen, right? What is this? This is number 3, right? If you invert this right here, this could be he. Then if you invert it this way, this could be M. If you invert it this way, this could be W. And this is how the market works. Your goal as a trader is to see the market from every point of view. Your goal as a trader is to see the market from every point of view. See the market from every point of view. And in order to see the market from every point of view, you've got to go to the higher time frame to look at the overall move that the market is making. Then you got to come to the lower time frame based on the higher time frame information to make more informed decision. So for folks that just go on just one time frame and wanting to make the market or make money off one time frame, I think it's time for you to start to readjust. Okay, so let's look at this, right? We have the low, then we have the high, right? And how did I arrive at this level? It's very simple. When you look at what the market has been doing, the market has been making a move, a higher low move, as you can see. Then this is a higher low, and we have the market right now. So this is the last low. Now, what is the significance of what we're doing right now? I want you guys to pay attention clearly. And I'm going to show you guys, so far this week, me and my student, we've been holding the GBP JPY buy, right? We've been holding the GBP JPY buy, and it's been a fantastic trade so far, right? And now the market rejected this low. Now pay attention to this, okay? And you don't need a lot of people are looking for holy grail strategy. Okay, I'm gonna do 1, 2, 3, and I arrive at 4. No, all you need is a full understanding of the market. Once you have the full understanding of price action, you can be fluid to analyze the market in any ways. And if you notice, most of my analysis, I don't use this complicated terms. I don't use this technical terms. I don't use this very crazy terms. I just literally tell a story on the chart, and I make money off the story I tell on the chart. I'm just a good storyteller of prices, right? And that is how I train all my students to be. Once you're a good storyteller of the market and the chart, you can literally make money off not just a single pair, any pair. And that's why I've got students who trade stocks with my strategy. I've got students who trade crypto, right? I've got students who trade gold and derivatives and all of that, right? Because it doesn't matter what chart it is, as long as it's a price action as a chart. If you are a good storyteller in the market, you can be able to make the most of the market. So get back to storytelling over technicality, okay? So now we have the market rejecting this low. It's just a common knowledge, right? When the market rejected this level right here, I want you guys to pay attention. When the market rejected this level right here, what do we have? We have a very sharp injection of buyers into the market. So the buyers push this market to the 204 zone, I believe. Let me see. Yes, we have the buyers pushed it to the 208 zone, okay? So now what happens at this 208 zone? Something really interesting happened. The market got to this point and the market starts to fall. As a good storyteller, the first question that comes to mind is, why did the market fall? Remember, if you're my student or if you've been in my community for a long time, I always say something, always look to the left. That's a cheat code, right? Years of experience right there. Look to your left. What do we have to the left? Oh, wow. We can see what the market did right here. The market got into this level, which on the 4 hours time frame, let's see if we have that level. I'm not sure we have that level on the 4 hours time frame. Oh, sorry, on the daily time frame. The market got to this level right here, touched this level right at this point, and started to reject. Now, what does this tells me? I want you guys to pay attention because I'm going to be making some very good prediction right here. The fact that the market got to this level and rejected, right? This level being it wasn't a strong level anyways, but the fact that the market got to this level and the market rejected, what does that mean? It means that the market is looking for anything to retrace for it to continue, because that level is not a very strong level. So here's my prediction, and I want you to watch out for this. I believe 100% that the market will trade as much as 215, 216. Yeah, and faster than we think, right? So now let's look at the market and let's see what the market is doing. So when the market got to this level, what do we have? We had a very strong sell-off of the market, right? Look at it this way. The market gave us a very strong sell-off. Now, it's just a common story. It's very simple. The buyers are pushing up, but they could not sustain the move, and the sellers took advantage. But guess what? The sellers never broke below this low. Now, what does that mean? You see, before you confirm that the market is in a buy or a sell state, right, the structure has to be broken. I'm referring you guys to my structure video, right? And if you need more advanced strategy, right, you can literally just get go to SwingTradeFXAcademy.com and just get my course right there. But by the end of this, I'm going to be giving some 5 or 6 lucky people, a discount slot, okay? Because I know a lot of people are on my wait list right now. So now, what do we have right here? The market, which has been coming on a higher highs and higher lows, and a higher high and higher lows makes us understand that the market is in a bullish trend. The market came to as much as this high, and what do we have? We have a low. But guess what? The low never broke below. So usually what I call this is the market came to as much as this level, left its footprint to that level, came up, came back right here and changed structure to the upside. So this market literally is on an uptrend. So let's take it to the daily time frame. So what do we want to see on the daily time frame? You want to amplify this. Remember what I said, you want to have a context, then you want to keep telling the story lower and lower, right? So we have this point, this lower point where the market rejected and the bullish, the bulls add an injection into the market and the market came atop at this level, and almost immediately we had a sell-off. But guess what? Regardless of how crazy this market is, the sell-off never broke this level. Now, what does that tell us? Regardless of what was going on in the market, the sell-off never broke this level. This should tell you something. This market doesn't move randomly. This market doesn't move randomly. This market moves based on principles and orders, right? And if you do not study this pattern, you are going to end up gambling, and thinking that every move that happens in the market, I gotta be there. No, there are certain things that happens in this market where you need to position yourself. You need to know when to be in the market. You need to know when to position yourself. Now, what information does this point give to me? Listen, this information tells me this, that the market's inability to break below this level and continuation to the upside means that we have a new low. It means that we have a new low right here. But we cannot actually ascertain this new low or wherever this new low is going to move except to go into the lower time frame. So let's go to the 4 hours time frame. So on the 4 hours time frame, what we want to do is to understand the dynamic of everything that's happened right here. Then we can use it actually to find and project whatever the market is doing on the higher time frame. So let's look at it clearly. So now on the 4 hours time frame, what do you want to see? Yes, we had a sell-off right here, which could not break below this level, right? But the market started to move up almost immediately, right? So what do we have? It's very simple. This is where you get to pay attention to details, right? Now, the first thing first is to understand that this might be a potential low. However, it is not a low yet, except it's being confirmed through the lens of structure, right? Which goes back into this market doesn't move randomly, right? So the first thing first is want to understand the seller's structure. So what is the seller structure that we have in the market? We have the market moving on the lower lows and lower highs, and lower lows and lower highs, and now we have this low, right? Now the market came up to as much as this level, but could not break this last low. Remember, this is the last low so far. So let's look at the behavior of prices with respect to this last low, right? This is the last lower high so far at this level. So let's look at the first behavior of the market, okay? Now, when the market got this momentum to the upside, remember, this low has to break for us to confirm that this low is very solid, right? So what has the market done? The market kept going down, kept moving up to the upside. That means every single thing the bulls have been doing right here has not been validated until the market broke this structure. Goes back to the principle of structure. For you to confirm that a move has started to the upside, what does the market has to do? The market has to break this one right here. It has to break the last low. These are laws and principles that governs trading, just like there are laws and principles that governs reality and just nature, right? There are certain laws and principles that governs trading. So you don't have to defy this law. Understand this law, use them in telling the stories of the market, and you're going to get rewarded, right? So now, what has the market done? What has the market done? When the market broke this level, what do we have right here? The moment the market broke this level, this was the point that confirmed the uptrend for us from a structure point of view. But usually, let me teach you guys this, right? Usually, when the market breaks a structure, a lot of people expect the market to just continue to move. No, the market will not always do that. The market will always take its time. So number one, the market is always going to issue a premium price, which is what we call a discount price, right? This discount price, I'm just going to cover it a little bit, right? And if you want, like I said, deep strategies, you can enroll into our academy. What the premium price means is this. You can think about it this way. If you have your entry at this level when the market broke immediately, right, you would actually be buying at an expensive market, right? So usually when the market confirms that I'm about to appreciate, it comes right back down to give us a premium price. So in this case, the market made a move to this level. A lot of people use different things to identify it. Some use the Fibonacci, some use the area of support or resistance, some use the pivot point, but the easiest to use is just the Fibonacci. And when you're using the Fibonacci, you don't need all the levels, the 61.8 Fibonacci. So you can go on your chart by yourself and bring out the 61.8 Fibonacci. You're going to realize that the 61.8 Fibonacci is sitting right here on this level. And that is the premium price. So the first premium price got in right here. And I remember that we took the swing last year, right? And the market kept going back up and up. But guess what happened right here? The market could not break above this level. And all of a sudden, the market started to come down. But this is not actually surprising. Why? Because we have this counter trend line right here rejecting the market. You need to be able to understand what is going on. So everything that happens in the market has a technical reasons to that, right? It is your duty as a trader to figure out what is going on technically for you to have an understanding. So now the market is back on this premium price right here. And this became the point that we looked at this week. We were initially bearish, thinking that the market is going to make a move back down to this level, which is more like a weekly level, but almost immediately the market began to reject. So what do we have right now? What do we have right now? So we have the market rejecting right here at this level, the premium level, right? Now, in this case, a lot of people are going to say the market came back to area of support, but I don't want you to just be myopic with what you see. Everything that is happening right here, right, was driven by the break that happened right here. So sometimes when I say to you that the market is going to go to this level, but I'm waiting for this level, it's because I'm following laws and principles. And if you understand this dynamic, right, you don't find yourself rushing into the market. Once the market break, just come like every other professional traders and institutional traders or whatever you call it and position yourself. This is where a lot of traders put their buy limit order, right? A lot of traders put their buy limit order at this point right here. And that's why you could see that when the market got to this level, it triggered and the market went up straight up. And look at it, the market came back to this level again, triggered and went straight up. You need to have an understanding of this, right? So what do? We go back on to the 1 hour time frame. Usually these days I've been doing more of big swings, right? So I'm doing more of the 1 hour time frame. So what has the market done so far? The market has broken this counter trend line right here, okay, and gave us a retest of it right here. So we got into this trade this week at this level, right? So we realized that when the market first touched this level, the market went up and broke the structure like it was going up. But we knew that this was a very, very fake break. And why? Because the market was going to reject at the previous area of support and turn into a resistance. Can you guys see it right here? So we have this previous area of support resistance rejecting the market. So it pushed the market further for the market to come grab some entry orders right at this level. So what happened? The moment the market start to move to the upside, the moment the market starts to move to the upside right here, you can literally see the market making that move. All you got to do is either you find your entry right here at the break of this counter trend line, or you find your entry more conservatively at this break, or you want to be extremely conservative, you wait for this break of structure right here for the level for the market to get in, right? So we got in so early, and trust me, I'm taking this trade way far. This potentially might be my biggest trade so far this year. I'm looking forward to other bigger trades, right? So now, where is the market at right now? So now that the market is right at this level, let's go back to the 4 hours time frame. Let's look at what to expect for this week, right? What has the market done? Why the market was coming right down, the market was giving us a lower low, lower high, lower low, lower high, and here we are. So I would expect that the next target of the market is for the market to come to this previous area of support, turn into resistance, right? So for next week, our what would be our projection, right? We would expect the market. So if you're not on this trade, this is the trade you should be looking out for next week, right? Wait for the market to break above this level, right? The market will definitely break above this level. Right now, the market is trading above the system, above the counter trend line right at this level, okay? So wait for the market to break above that level. Now, when the market break above that level, do not enter immediately. Like I said, the market always issue a discount. So these are the two levels you should be looking out for this new week. This inside structure right here, and you can see that the market is having a long time breaking this level. So we have those two inside structure right there. So these are going to be my two possible move next week. It's either the market break and the market comes to this level, then we can find an entry right here. Or better still, which is most likely, let the market break, let the market come back to this level right here, and then you can buy back to this level. Whichever the case might be, this trade should guarantee you nothing less than 1:4. Nothing less than 1:4. So what should be your execution, right? Your execution should be let the market bounce off each of this level. Let the market give you a change of structure to the direction of the trend. Let the market give you a change of structure each, whichever the one the market does. So first, if you're not in on this trade at this point, there's no worries, right? Allow us to take it up, right? We, the bulls, we're in. Let's see whatever we'll do. Once we take it up, let's see which of the retests we are going to get. Are we going to get the first one after that break? Are we going to get the second one after that break? Then we can run it up, right? And we want to take our profit. Why do I say we should take a profit? Yes, for me, I'm taking this up to the 208 level. You know, I'm a swing trader, right? SwingTradeFX, obvious, right? But then if you should enter at this point, there might be some pullbacks that happens in the market, right? So you don't want the market to take you out after you've already gotten into like 1:3, 1:4. All you have to do is to be systematic. Get into the profit, get out, right? Myself, I'm going to look forward to perhaps take some trade right there and get out at that level so that while my swing trade is running, I still have some to compound, right? And I'm using equity that are floating as my risk, right? I'm not using my capital. I'm using the equity from the floating profit as my risk, right? That takes a lot of technical strength for you to do, right? It takes a lot of technical understanding, which is something I talk about a lot. I think beginning of this year, I made a video on how I'm able to leverage on one move and just take multiple trade opportunity, right? To 10x my profit, right? So now, this is what we should expect. And on the 1 hour time frame, this would be what we should be looking at. Also, depending on your time frame, you want to enter 30 minutes, 1 hour. So this is what we're definitely going to be looking out to actually getting this new week. So let's wait for the market to break above this level. We're going to have either of these two retests, and either of them should give us minimally 1:4. So we're going to see this and we're going to watch how it plays out. So yes, for a lot of people who are on my waiting list and they want to enroll for the February mentorship, yes, definitely. We're gonna open some slots over the weekend. You know, you don't have to, right? But listen, I'm going to tell you this, right? For you to be successful in forex trading, you have to ride on someone's experience. It's going to save you time, it's going to save you your emotional strength, it's going to save you your money, right? So it doesn't have to be me. Just look out. There's a lot of traders everywhere. Look out for people that serves your purpose. Look out for traders that can explain the market to you, that have the psychological, powers and are always available for you. Keyword available for you. Don't pay money to just go read PDFs. The courses, forex trading requires practical knowledge. So you have to engage your sense of hearing, your sense of sight, and you have to be able to hear things, right? So don't just pay for some PDFs and go read. Those are bullshit, right? It doesn't work. I can tell you categorically 100%. So anytime you want to get a mentor, make sure you look for someone that's accessible. Look for someone whose style fits into your narrative. Look at someone that has used the least complicated system to explaining the market, not a lot of technical terms and all of that, right? So we're going to be offering, if you want to get sign up to our academy, just go to swingtradefx.com, or you can send me a text directly on Telegram, right? At I'm gonna pin it right there on the chat, right? Just text me directly at and be aware of scammers. I'm aware that a lot of people are taking our content and they are doing a lot of scam. We're working on it. We're working on how we can actually get them to stop that. So you could text me on Telegram right here. We can get you started. And if you have any question, you can also send it over to that point. So before we leave this live chat, I want to ask you that if you have any question, I'm just going to take one question and we're going to call it a day just to respect our time. So yeah, it's open for questions, guys. And by the way, if you take this trade next week, send me the pictures, okay? Send me the outcome of your trades. I think recent time I've seen the power of just posting reviews because maybe I see a couple people reached out to me this week after I posted, just the result of a student, and I can see how inspiring it is. I really do not like posting about like my student. I respect their privacy, but I see that it really helps a lot of people. Perhaps you're going through some struggles, just seeing that people are going through, I've gone through that kind of struggle and they've made it out actually is encouraging. So do we have any question in 2 minutes? Then we're gonna get out. Let's see. Okay, if in the absence of question, um, I want everyone to, okay, someone has a question here. I have some point that get tricky. I believe that forex trading will flow with the habits and behavior of consistent, profitable, wealthy traders, investors. But some of us describe forex trading as buying and selling of different currencies. How do these terms connect with each other? When it's all said and done, nobody has an autonomy of the market. My money, your money, and the millions and billions other contribute to what moves the market. A lot of you guys, have this belief there are some institutional trader targeting your $1,000, $10,000, $100,000. These people do not care. The point is to know the point where you are going to find your trade entry. Know the type. Say, for example, you want to take a buy trade. Know the level where the buy trade might reject. Have a rule set on when you're going to enter in such a way that does not actually have to take you out, and that's all. At the end of the day, everything is all technical. Someone says at times the retracement does not reach the 61.8. Should we not take this trade? Well, for retracement that doesn't get to 61.8, perhaps the structure is not aligned in that way. But for me, I work with 61 point, and that's my rule. If it doesn't get to 61.8 and I don't see my final confirmation, I'm not going to take that trade. Okay. So before we go, let me know if there's one thing that you've learned on this live session, would you say it's psychology, technical, or technical and psychology? Let me know before we call it a stream. What would you say is your biggest takeout in our trade today? What would you say is your biggest takeout? Let me know, guys. Let me know. What is your biggest takeout today from this class? Would you say, does it reflect where you are psychologically? Does it reflect where you are technically? What areas do you think you have to do better on? What areas do you think you have to do better on? Let me know real quick. And someone says, comment on prop trading. They are out there to take your money. Simple. And I say this from experience. Prop trading are there to take your money. Their business model does not incentivize traders, okay? Their business model is to make money off of you knowing that you're going to fail 99% of the time. Only a few percentage make it out in props trading. And I can tell you for a fact, I've traded prop firm before and they've taken away my $8,000. They've taken $11,000 from me. I've experienced $10,000. I have students that made $12,000. They never paid it out, right? You just want to put your money, right, into brokers that actually have a very good regulation, you know. So someone says technical and psychology, dealings, psychology, never trade from a place of desperation. Absolutely. And on that note, thank you guys so much. You could text me on Telegram for any inquiries and to get into our mentorship program. We're going to be giving 6 people an opportunity to get it at a 40% discount. So it's going to be merited. So we're only going to be taking 6 people for the rest of February. We don't want to overstretch ourselves. We don't want to, just take on people that we're not going to be able to mentor and nurture, right? So thank you guys so much. And I will see you guys on the episode 3. I don't know when that is going to be, but it's going to be great. So let me know if you get this book, you can send me a personal message on how this book transformed your life. Okay, let me know. You shouldn't just only grow financially, but you should grow mentally. And like I said, don't have a consumer mindset, don't have a consumer mentality. Make money off forex trading, diversify and build portfolio. Don't buy crazy things with your money. Let whatever money you make here, let it make more money for you. Diversify your income. The more you diversify your income, the less desperate you are as a trader. You've got to be a mature person. You have to be a mature trader, okay? Thank you guys so much and have a wonderful rest of your weekend. Happy Valentine's, everyone.